We saw the S&P 500 continue to make a series of lower high and lower low, and we are expecting to see the similar type of price action to continue for the coming week. And looking here at the ES, we see that at the beginning of the week, it started out at the upper range of the weekly expected move, and then finished the week at below the lower range of the expected move. And for the coming week, the market is pricing in the upper range between 59.85 and 59.71, and the lower range between 57.52 and 57.15 for the ES. So the price action that we'll be watching for the coming week is to see will it continue to move down to the lower range to put in a lower low, or will it first come up and try to put in another lower high before it get rejected and come down to the lower range and put in another lower low. Now also we see that there is this 30-week moving average here, and right now on Friday we saw a little bit of a bounce here. So we'll be interested to see would it be able to hold above this 30-week moving average, or would it break this moving average and come down, test this trend line that's basically right here at this LVN around 5803.25, and then it break this trend line, come down to test this lower range of the expected move. And on the SPY, the ETF for the S&P 500, we see a similar type of price action. It started out at the upper range of the weekly expected move and finished at the lower range of the expected move. And for the coming week, the market is pricing in the upper range between 593 and 591.60, and the lower range 569.40 and 566. So what we be watching for is again a series of lower high and lower low. So either it's going to come up, get rejected at the upper range, and then push us down to test this trend line and possibly get into the lower range, or the other scenario is just continue to move down to the lower range to continue to just push into a lower low. And for the NQ, we saw the NQ, the E-mini NASDAQ 100 future also started out at the upper range of the week and came down to the lower range of the weekly expected move by the end of the week here. Basically looking at a similar type of price action as the ES and the SPY. And for the coming week, the market is pricing in the upper range between 21,575 and 21,498, and the lower range between 20,497.50 and 20,300. So again, we're basically looking for a series of lower high and lower low to continue. So we're looking for a possible rejection from the upper range and then push down to the lower range, or continuation of moving down to just put in a lower low. And for the Q, the ETF for the NASDAQ 100, similar price action, started out the week at the upper range, closed at the end of the week at the lower range here. So for the coming week, we basically also looking for a continuation of this downward price pattern. And the market has priced in the upper range between 521 and 519.60, and the lower range 494.80 and 491 for the coming week. Now again, we're basically looking for a push up to the upper range and then get rejected and come down to the lower range, or a continuation of moving downward to put in a lower low. So those are the price action for the coming week. Now let's take a look at the market as a whole and see what the internals are telling us, and also what are the sentiment from the market participant. So far, the month of January has not been good for the S&P 500 and to the market as a whole. And you can see after the first 2 weeks or so for January, it's basically been negative for the first couple of days, shortened week on both weeks, and it's been negative. And looking at this daily chart here, we can see that the price been chopping around, and it is under this 30-day moving average, and also been closing below that. So right now it's forming a little bit of a descending wedge here, or a little bit of a channel, although it is still above this 30-week moving average. And looking at the Dow Jones Industrial, you see the Dow Jones Industrial is making a lower high and lower low. it broke this trend line and also came down to this 30-week moving average here on Friday. So it's basically testing this. It'll be interesting to see, would it be able to hold this level here in the coming week, or would it break below this pivot low? Then we could see it work itself down to these lower level down here, somewhere in the 40,000 area. And for the New York Stock Exchange Composite, we thought it was gonna make a higher high here. Then all of a sudden it's just kind of fooled us, and right now it seems to be making an equal low. And I wouldn't be surprised to see it break this pivot low here in the coming week and work itself down to this area here, somewhere around the 18,500 area once it breaks this trend line, and also dipping below and staying below this 30-week moving average. And for the NASDAQ 100, also is making a lower high, and it broke this trend line here on Friday. So we'll see, will it continue to come down and test this 30-week moving average down here at near this 20,000 area, basically come down to possibly get down to this pivot high here or this low area. And here's how all the major indexes looks like after Friday here. You see the Dow Jones Industrial is down below the 30-day moving average. Once we see a red cloud here, then we know the closing price is below that 30-day moving average. Similarly for the New York Stock Exchange Composite, the Dow Jones Transportation, and the NASDAQ 100, the S&P 500, and the Russell 2000. And here, looking at this table, you can see that the Dow Jones Transportation is actually the best performer, or at least it lost the least for the week. And the worst performer lost the most is the Russell 2000. Now, you might want to just pause this video and then kind of go to the number yourself here. I'm not going to go to each one of them. And here are the 11 sector in the S&P 500. As you can see, the technology also dipping below the 30-week moving average now. Is kind of rolling over as well. And the discretionary, the communication, the retail, and also the industrial. And look at the energy, quite a change from the energy is actually peaking above this 30-day moving average. So the energy has been showing some strength recently. And here we see the consumer stable is also continue to decline. And the healthcare is also making a move downward, continuous decline. And the utility, and also real estate, and the financial. So as you can see, all the sector other than the energy is making some gain. The other 10 sector is actually rolling over and dipping below the 30-day moving average. So here's a table of the 11 sectors showing the performance. I don't know why is it loading here for the consumer stable. So I know it's not the top performer. The top performer for the week was energy. You see that the energy is actually came up and peaking above this 30-day moving average. And here are some of the other key industry. Here's the sector. Okay, the semiconductor is still pretty much chopping around this area here. But look at the USO. Right? We saw the oil coming up. Remember a couple of weeks ago, we were looking at this. And you can see that is also finally the producer and the explorer. The energy producer and explorer is also coming up now. And we saw that in the 11th sector, the energy sector is actually making some headway on the upside. Now the retail is still going down, and also the biotech and the miners is also going down. And here we're looking at the banking sector also still going down, the bank and the regional and the home builder, and look at the TLT, the long-term bond, continues to move down, and that implies the 10-year yield is continuing to move up toward that 5% level. So here's the table of all the performances for the other key industry or key sector here. You see the USO, the oil and the producer is the top performer, and those are the only two sector actually show a gain for the week. All the other one show a loss, and you can see semiconductor lost 1.87%. So it's just pause on the video and then go do the number yourself. I'm not going to go do it individually. Look at the sentiment chart here. See the VIX. We see the market participant is coming up to be a little bit more fearful now, although it is not in a panic mode yet. The VIX closed on Friday at 19.54. So definitely the market participant are getting a little bit more fearful, less complacent. And also on the put call ratio, we saw it came in above this 0.75, sitting at 0.7998. So it's almost 0.8. So again, we see that a lot of the market participants are putting on hedges, although they are not risk off yet, but they are still risk on with some hedges being put on, buying put for protections. And looking at the up-down volume for the New York Stock Exchange, mostly down on Friday, we pretty much been selling throughout the day. And the daily advanced decline, we are seeing every session throughout this week, there are more declining stocks than advancing stocks. And for the new high, new low, we see that the number of stocks making new low have accelerated up back up to above 200. On Friday, it was 233. And the number of stocks making new 52-week high below 50 area for the last few weeks now. So definitely the new high, new low is showing a lot of weakness here. And looking at the cumulative AD line for the New York Stock Exchange, you see that it is still declining, and also the S&P 500 on a closing basis is also declining. So at least it came back in sync instead of running with a negative divergence. But direction is not something to write home about. And looking at the internal for the Nasdaq, we also noticed that the up-down volumes have been negative. The up-down volume ratio has been negative. And also the daily advanced decline also show broad market participation on the downside. Similarly to the New York Stock Exchange, the Nasdaq new high, new low is also showing the acceleration of number of stock making new 52-week low. We are seeing weakness in the new high, new low for the Nasdaq. And for the cumulative AD line, we are seeing declining cumulative AD line along with declining Nasdaq 100 on a closing basis. So overall, the sentiment is that the market participants are getting a little bit more fearful now and putting a little bit more hedges to protect their position. To see additional contents from me, be sure to go check out my newsletter at Substack. The link is smtraderCA.substack.com. I have put that link in the description below. And if you like the content in this video, be sure to smash the thumbs up to give it a like and help me promote this video on YouTube. And if you are new to this channel, click on the subscribe to help support this channel. Thank you for watching and good luck on your trading.